Are reverse mortgages predatory? Today we're going to dig into the basics of what a reverse mortgage is, as well as what used to happen with them, which gave them that terrible reputation, and 3 big changes that have made it so that reverse mortgages is something that as a lender, we're utilizing with clients to help them in their retirement planning. So if you're new to the channel, I'm a lender licensed in 48 states. I'm a top 1% lender. I've been a lender for 17 years. So here's the deal. Once upon a time, would I ever talk to you about a reverse mortgage? No, no, I wouldn't. And it's because it was not a very good loan program and it did not have safeguards. And that's the biggest issue. So if someone's like, don't do a reverse, I guarantee you they're saying that because of something that they heard years ago. Because before the safeguards, it was the Wild West. So let's talk about some of the stuff that used to happen and the safeguards that are now in place. Number 1, people were getting into reverse mortgages without understanding how they worked or what their responsibilities were. That's right. So the concept of a reverse mortgage is you're using your home's equity. So instead of a loan where you're paying it off, the loan's actually growing every single month, because you're using that equity to either not make payments or to get a monthly distribution, or you may have taken out a lump sum. Instead of making monthly payments, that loan is growing. Now here's the trick. You have to still pay your property taxes and insurance, okay? It has to happen. And what you would hear is these horrible stories of seniors losing their homes, and it was because they hadn't been paying their property taxes and insurance, and they hadn't been maintaining the home. Now, does the home have to be maintained like a palace? No, but if your property is getting red tagged, meaning the county's coming after you, then yes, the lender could step in on that house. So there was a huge lack of education. You also had, the traditional slimy salesperson that was saying things like, yeah, just sign here. You never have to make a payment again, without explaining how it worked. Or that if, for instance, if they went into assisted living, that they can't just keep the house. Right? That's the thing. If let's say that it's just me and I'm in my 90s and I go into assisted living, guess what? That reverse mortgage comes due. And do I have to personally pay it? No, the property can be sold, but there was not a lot of education. So now it is required that a HUD consultant speaks with every single borrower independent of the lender. It's a third-party person who specializes in reverse mortgages that's making sure that this actually makes sense for the borrower. Because one of the big problems in the reverse mortgage space is the lenders who do these loans only do these loans. I'm not kidding. That's the thing. It's like if you go to an ice cream store and they only sell vanilla ice cream, well, guess what flavor you're getting? You're getting vanilla. So a lot of people were being pushed into reverse mortgages, and they still are, when it doesn't make sense. So you really want to make sure that you're working with a lender that does forward mortgages, which is your traditional 30-year fixed, HELOCs, and reverse, because depending on your financial situation, a reverse may not make sense, okay? So the next big issue with these loans was that what would happen is if someone had a younger spouse, if the older spouse died, this person was basically kicked out. Like, it was brutal. They now have safeguards so that the younger spouse has the same protections as the borrower. That was a huge step forward because that was a big concern for many people. If their partners were 10, 15, 20 years younger, the last thing you want is for your partner to end up on the streets. So that safeguard is now in place. The third, and what I think makes it so that this is now a retirement planning tool, is that there's a residual income calculation. So what that means is that the lender is not just looking at the equity of the house, which is what they used to do. They're also looking at what your monthly costs are going to be with taxes, with insurance, the basic necessities, to make sure you're going to have enough money to pay for that. Now, that is a big step, because in the past, if someone was just looking at the equity, they could say, oh, here's your draw. And then 5 years later, you can't afford your taxes and insurance, or you can't afford food, or whatever's happening with your financial planning, and you're in a bad position again. So look, reverse mortgages, I'm going to be talking a lot more about, because if you look at the statistics, it's actually alarming. We have a retirement crisis on our hands in America. We have over 76 million baby boomers who have 80% are homeowners. Yeah, 80% are homeowners. They have like over 70 trillion in home equity, less than 200,000 in retirement. Yeah, there's a lot of people right now who are working and working and working. They have houses with tons of equity and they can't retire because they have no retirement. But if they actually look at a reverse, they could retire. So I think it's something that we need to start talking about, because none of us should have to work. None of us should have to work till we die, guys, especially if you're sitting on a mountain of equity. So look, once upon a time, were they predatory? Yes. Now, do they have safeguards? Yes. Do you still need to be careful about what lender you work with? Yes. If you have questions about a reverse, or you want to walk through your scenario to be like, well, would that make sense or that makes sense? Feel free to reach out, because we do all loan types. 786-933-2077. Thanks for watching, guys.